Hello and welcome back to the Mobile Mailbox Money channel. Take two of the live today. Was a little off this morning, but that's okay. We go live daily and bring you market data, the analysis you need in order to make an educated decision in niche market notes and real estate investments here in the local market of Scottsdale, Arizona, providing national availability, worldwide availability for mailbox money, and ultimately a passive real estate return, which is scarce available opportunity right now. I talked to a lot of investors who are on the sideline, ultimately worried, uncertain about what the market is going to do, and they're really sitting with liquid capital in their accounts because they want that sleep at night, stability, be able to not have to pull their hair out for up and down volatility in the market. All the above at the end of the day. So today we're going live to talk about what's really happening in the market right now. Federal Reserve Chair Jerome Powell is under massive pressure to cut interest rates, but so far nothing's changed. And while talking heads argue about timing, real investors are stuck in limbo. Stock market, overvalued. Real estate rentals, cash flow squeezed at best. You're buying break-even deals, people. Bonds and treasuries barely outpacing inflation. Pay attention. So what smart investors are actually doing. I know multiple investors, real people, not theory, who are sitting on seven-figure cash balances right now. Why? Because they want sleep at night money. They're not chasing risky rentals or speculative bets. They're protecting wealth, keeping liquidity, and waiting for the right opportunity. And that's exactly what we provide. Wealth protection in a volatile market and passive monthly returns without compromising risk, and a collateral-backed first lien notes offering double-digit annualized returns. Today is brought to you by Silvercrest Opportunity Fund. Invest accredited in 506c 3c1 Silvercrest Opportunity Fund and earn a 10% net return for a one-year term or 12% net for 3, being the bank and becoming a per unit owner share in double underwritten performing debt. Sounds like a myth or too good to be true? Well, that's not the case. I seller finance and yield 14% on the paper I originate. And we look for capital investors, whether accredited, investing in the fund and portfolioized debt, providing a income-oriented investment strategy in a time when it's needed most, and wealth protection for capital investors. If you're non-accredited, you could buy a note today at mobilemailboxmoney.com with terms from anywhere from 1 to 25 years. And that provides an investor a double-digit interest rate outside the stock market and collateralized lending opportunities. Why is this something that you need to pay attention to? Well, with little to no alternative investment strategies outside the stock market, with stability right now, rental rates are under pressure. Single family pricing's under pressure. We're seeing, first time plateaued since 2020 at average purchase prices of $460,000 here in the Valley. We're seeing bloodshed and multifamily complexes and investment strategies because of fluctuating interest rates, which could create opportunities at the end of the day. And we're actually looking at some of those, but nothing beats the bank quality stability investing like who? Warren Buffett. So if you put your nose up at this strategy and no one's investing in manufactured housing, do you think you're smarter than Warren Buffett? Well, let's talk about it. Because today I put together a little slideshow for you guys to, look in depth of what that looks like in manufactured housing and how we emulate a Warren Buffett investment strategy. So Warren Buffett's investments, how do we ultimately emulate a Warren Buffett investment strategy? And, what are Warren Buffett's investments? An overview of Warren Buffett's approach. Did you know he owns Clayton and Cavco? Those are two of the largest manufacturers of mobile homes in the nation, actually building the homes. So we target affordable housing in a Warren Buffett investment strategy. Why? Because when the market's hot and people can't afford real estate, where do they go? Affordable housing. When people are needing to downsize because of market risk and they're worried about everyday pricing, everyday inflation, they downsize. Where do they go? Affordable housing. Affordable housing is not going anywhere. So in Arizona, did you know in Arizona, 10% of housing is actually manufactured homes? That's more than 250,000 mobile homes here in the Valley, all being financed, insurance policies, and in established communities on leased land, majority of them, there is a good amount of real property transactions going on here in the Valley. But as the unaffordability of the Valley has kept increasing over the past 5 to 7 years, manufactured housing on leased land is becoming that much more of a palatable end user situation where individuals can no longer have to worry about renting for the rest of their life. They can actually get qualified ownership. And with the quality of manufactured housing that has increased over the past 10, 20 years, it's becoming a lot more palatable of a living situation for the end user, and also inadvertently is increasing the grade of investment for capital investors. And that's why Warren Buffett goes after this asset class and affordable housing and 250,000 manufactured homes here in Arizona alone. So with little to no competition here in the Arizona market, and 1,400 mobile home and RV parks, according to the U.S. Department of Homeland Security, that's vast available opportunity creating a problem. Why? Because personal property and manufactured housing in general has issues with institutional financing. Virtually non-existent, depending on the credit criteria of the buyer, for leased land chattel mortgages. There's 3-4 major players in the nation. I've bought and sold over 300 manufactured homes, and I've converted with maybe 2 of them. So, huge problem, huge need, creating a golden nugget opportunity. Why manufactured home notes? Well, the demand for affordable housing is made such now more than ever because it's a state of emergency, with average purchase prices exceeding what average incomes can even qualify for. Creates the problem. Not only that, but creating the opportunity with low competition in the environment. In comparison to a residential real estate environment where everybody and their mother does flipping houses, wants to get into real estate, not that many people think about manufactured housing. And when you talk to them about it, they put their nose up like they know what they're talking about. Consistent cash flow on payments with lower than traditional acquisition costs and higher return on investment, with a collateralized asset and a double-digit interest rate with a first lien position secured to the home as collateral. That's where it's at. From the affordable housing to low competition, providing consistent cash flow and a collateralized lien. There's individuals raising hundreds of millions of dollars right now on in the public market through publicly traded companies, and they do non-collateralized lending at high rates. But this is that much more of a superior opportunity. Why? Because you have a physical asset. There's a tangible home with a double underwritten borrower, and we'll get to that, providing a double-digit interest rate. I mean, this just to me seems like a once-in-a-lifetime opportunity for high-yield performing debt. On residential real estate, you're going to spend $150,000 to $200,000 on a note, maybe $100,000, and get an 8 to 10% interest rate. You'll have to negotiate a discount on those notes in order to facilitate a higher yield. Well, here's your chance to buy a double underwritten note performing on a quality home with a deserving borrower and a double underwritten client. So not only do they fit a 600 plus credit score or ITIN number, sometimes it's a little bit less depending on the overall financial well-being of that individual, but also case unique, specific for manufactured housing on leased land, because the communities require no past evictions, no felonies, no open bankruptcies, verifiable income. That's the first step in qualification. They go formal third party and apply at the park. The park validates that information. And then we go through a second round of underwriting, providing a Dodd-Frank compliance to the end user and a mortgage officer processing the application. They go through, debt to income ratios. They verify their income, check their credit score again, and mimic somewhat of a FHA style bank quality credit criteria and verification of debt under 55%, I think that rate is. But opposed to, other collateral and note investments, you're hedging your risk with more affordable assets, which means you can diversify that much more with the same capital outlay. You can buy that many more notes, when in comparison, you'd buy maybe 3 notes on residential property for $600,000. For $600,000, you could buy like 6 seller finance notes on paper yielding 14%, providing you a double-digit interest rate, okay? In a collateralized lending opportunity, loan comparisons, we seller finance at 14%. 21st Mortgage has actually even matched our rates. They'll go up to 25 years. That's Warren Buffett, people. Other traditional loans will go up to 30, if land is included. But the collateral type's all the same. Manufactured housing, Cascade Financial, Teamwork Mortgage, Vanderbilt Mortgage, a couple others that are in this space and doing hundreds of millions of dollars in business. 21st Mortgage owns 30% of the market nationally, and I'd like to be up there as well. Offering seller finance, not operating third party, but originating via seller carry finance on homes that we've procured out in the market. So highly unique comparison, because we're not just a lender, we're also the largest dealer of manufactured housing in Arizona, with institutional recognition and resilience out in the market. 8 years of business, 300 transactions, licensed, bonded, insured. So what's the advantage of investing in manufactured housing when in comparison? I mean, we've talked about it a few different ways, but on average, for an $80,000 acquisition, you're making upwards of, more than $750 a month passive, with wealth preservation in mind, a double underwriting process, quality collateral, and investing like Warren Buffett. So, the notes are really just where it starts. And emulating Warren Buffett's ownerships in Clayton, Cavco, 21st Mortgage, and Yes Communities, his billion-dollar bet that you should be paying attention to. It's just the start of the program. So we've started Silvercrest Opportunity Fund, where investors can receive a set it and forget it investment and return on their capital for a 10% net return for 1 year or 12% net for 3. You can invest with your IRA, solo 401k, or really just for personal investment. And I've been officially endorsed by Pace Morby. Not so much official, but had him on an interview at the Alternative Asset Summit. So let's see if this works here. We'll find out after if you guys can hear this or not, but let's check it out. We're here at the Note Expo 2024 with the godfather of notes, Mr. Eddie Speed. Eddie, if you could just introduce yourself for the viewers that don't know you.
Well, my name's Eddie Speed.
We're at the Weston Galleria with Mark Monroe here at Mobile Mailbox Money and Silvercrest Opportunity Fund. Mark, if you could just introduce yourself for the viewers that don't know you.
Hello, guys. My name is Mark Monroe.
Alden Guajardo with Mobile Mailbox Money and Silvercrest Opportunity Fund. We're here today at Scottsdale, Arizona at the Alternative Asset Summit, thrown by Directed IRA. I'm here today with Mike Delpre. Mike, if you could just introduce yourself for the viewers that don't know you.
Yes, Mike Delpre, Executive Director of the Arizona Real Estate Investors Association.
Alden Guajardo here today at the Alternative Asset Summit with Mobile Mailbox Money, Silvercrest Opportunity Fund, and Studio Captions and Advertising. I'm here today with Desi Arnaz. Desi, if you could just introduce yourself for the viewers that don't know you.
Hi, I'm Desi Arnaz, and I am the Senior Fund Manager at the Everly May Real Estate Fund.
Where's your Pace Morby, our booth's right here, silvercrestopportunityfund.com.
I love it.
That's for accredited investors. What's your take on that strategy?
I think it's the greatest strategy. Affordable housing. If you're not solving affordable housing, then what are you doing? Like, I see people trying to get into luxury stuff, and they're just in the wrong area.
Absolutely.
Affordable housing, mobile homes, manufactured homes.
It's here to stay, right?
Oh, bro, it's just going to blow up.
What's your opinion of the stability of that asset class as the note, the seller carry note? It depends on the origination, right? So if it's underwritten, right, you have security on title, you have a lien on the property.
Loan to own, guys. I mean, at the end of the day, you're going to be loaning to own. So when you're originating a loan, worst case scenario, you take back the property that you originated the loan against.
It's a tangible asset.
Yes, it's the best.
Absolutely. Well,
I'm loaning money on a non-tangible asset today, and I'm like shaking in my boots. So don't put your money where I put some of my money, okay? Put it over here.
Absolutely. Absolutely. Well, that's Alden Guajardo here at the Alt Asset Summit with Silvercrest Opportunity Fund and Mobile Mailbox Money.
Shout out.
Bam, bam, bam. That's how we do it. So we're here today in Chaparral Village. We've done a tremendous amount of business in these communities from Cal-Am Properties. This one in particular in Tempe off major cross streets of Kyrene and Baseline. We're currently rehabbing this home right behind me. Took all of the old metal siding off, all of the old windows out. We'll be getting it to a brand new looking manufactured home. The cost to replace something like this, to go buy from the manufacturers that offer mobile homes here in the Valley could cost a community or an individual around $150,000. And by the time they get it here, there's still no profit. So they have to mark that price up. So if the community is doing that or an individual wants to do it themselves, you know, Eddie's thrown the Note Expo for a few years now. We're here at the Dallas Weston Galleria. Eddie, we originate notes on manufactured housing for the more affordable acquisition for the investor, offering a higher yield. What's your opinion of a strategy like that? You know, low cost housing is important out in the market right now, and we feel it provides a great stability outside of potential fluctuations of the stock market, right? What would you have to say about a strategy like that being out here at the Note Expo?
Well, I've bought thousands, literally, of notes on mobile home and land. So I understand the collateral type very well.
Absolutely.
And I think you're right. It does give the value of affordable housing, and it solves a problem for people.
Boom. Dropped a bomb. That was Eddie Speed, Mark Monroe, Pace Morby, and many others. I'm Alden Guajardo with Mobile Mailbox Money, Silvercrest Opportunity Fund, and One Mobile Homes. Appreciate having you guys here today. Invest now, accredited in Silvercrest, or call now for more information at 602-888-CASH.